موارد فاينانس فالك طيب.
Let me invite to the stage Nauman Hassan, Regional Director for MENA Paymentology. Nauman, thank you very much for joining us. Yeah, join me to welcome Nauman. Yeah, and let me invite also Filip, Bloch, the founder and CEO of Pace Solution. Filip, I know he's here. He will show up. And also, let me invite Rohit, Ramana, the co-founder and CFO of Mintoak. Okay, let us just wait for Filip. I know that he's here. Okay, without wasting your time and waiting for Filip to join us, let me start with Nauman. Nauman, we have a challenge. The UAE already have introduced a stablecoin. You can tell us a little bit about it. But people are asking, are we actually ready for our daily operation, our daily interaction? You have the point of view of issuers and processors, and you understand the risks, compliance, and real-time requirement to run these systems and make them really useful to people, to merchants, etc. So introduce us a little bit about you and what your company do, and highlight this on how you see it. Is it working?
Can you hear me?
Yes.
Perfect. Thank you very much. It's a pleasure to be here. So I represent Paymentology. I'm the regional director. Paymentology is API first, a cloud agnostic issue processor. We are processing globally for over 60 countries and 14 time zones. So it's a loaded question. It's an interesting question. And I would like to start by saying that this question actually captures the intersection between the blockchain innovation and the already existing payment infrastructure. So when you talk about the stablecoins, in my opinion, it is the most practical bridge between crypto and fiat. And why do I say that? It's because they bring the efficiency of blockchain. And how do I define that actually? For example, instant payment or instant settlement rather, programmability or transparency. So the blockchain actually brings this element of efficiency into an already existing trusted ecosystem that is regulated. So that's important. The second thing is that the magic I think doesn't happen at the blockchain level. I'm coming from an issuing processing, so I would definitely talk about it. So it's the middle layer. It's the layer where the issuing processor actually translates or maps the digital assets into the real payment currency or the real payment value, so that these values or these ecosystem transactions can be understood by the merchant, by the customers, by the schemes, by the regulators. So that's basically the highlight of what I see. Now you spoke about regulations, you spoke about compliance. This is an important factor, and we should tackle. In my opinion, basically, a transaction that is crypto in nature should actually follow a bank-grade payment transaction. So that from a consumer perspective, it is seamless, right? The experience is seamless. And from a regulation perspective, the regulator do not identify crypto as a transaction that is blockchain or crypto in nature as something outside the box. It should actually be identified similar to the existing ecosystem. Now, when you speak about regulations, when you speak about compliance, I would basically highlight three fundamentals or three basis. The first one, issuance and custody. It should be regulated, it should be properly backed. The second one, because we are building a full ecosystem, a full cogs working together. So there should be proper end-to-end sanction checking, AML, KYC. And lastly, which is very important, and this is where we do talk about UAE-backed stablecoins, the WARAs, and so on and so forth, it's the licensing and the oversight, because compliance is no longer an option. I mean, it's in the DNA of every transaction, and it is important. So that's from a regulation and compliance perspective. If you talk about FX, because this is important, I would like to put forward a business case, because we are processing globally for the likes of Rain, for the likes of Red Dot Pay, for the likes of Tenjim. So we have the experience of how a crypto-backed wallet can use the merchants accepting at the fiat level, and how seamlessly the whole ecosystem works. So how it happens is there is a real-time FX interchange or FX conversion that happens between the schemes. But then again, there is a crypto exchange at the back, which actually should also replicate or should be one-on-one mapping the value that is being transacted. So at the end, the consumer actually feels that the crypto wallets are being debited, whereas the transactions are happening in dirhams and so on and so forth. Obviously, we need, there are multiple players of the ecosystem. As I already said, there are multiple cogs. BIN sponsorship is one important. So you need to have a BIN sponsor that can issue the BIN in USD. Then you have a stable coin backed up by, for example, USD, and then you're transacting in AED. So there are multiple layering, I would say, of FX, real-time FX that is happening. At the end, if we wrap it up, what is happening is you're providing the consumer efficiency of the crypto-oriented flow, but you're also providing the consumer the certainty that is there in the fiat. So coming back to your question, replacement, I don't think so. You're providing multiple layers, you're providing multiple rails, you're providing more options. It's a fusion between the blockchain, it's a fusion between the blockchain and the fiat. Everything is working together. I did hear a lot of people talking about the journeys that Revolut took. I mean, they did not displace any of the products. The product, it was like a block. You provide options to the consumer. It's a global village, right? You provide more and more options. You provide more and more appetite to the consumer to transact. So this is, in my opinion, how I see. Lastly, probably transparency and trust. We actually hear a lot about transparency. So when you talk about blockchain, transparency is all about how the whole ledger probably can be verified. And when you talk about trust, it's the governance model. The governance is very important. The custody of the assets is very important. So yeah, that's probably my roundup on fiat versus crypto.
Yeah, a lot of things to think about, Nauman, and I feel that as people will understand stablecoin and merchant will understand stablecoin, a lot of people will be knocking your door, yeah? Yeah. Okay. Let me move to Filip. Filip just landed from a plane with a parachute directly to us. And Filip, he's the founder CEO of Pay Solution. And Filip, I want you please to look at it from the infrastructure point of view. Regulated organizations need to feel that they can trust the system. They can trust that all the transaction or the actual money is now digital. Tell us about your company and what are you bringing to this?
Hello everyone, my name is Filip. I'm from Paris. Yes, I just landed this morning from Europe. I've been traveling all over the Europe, Sweden, Switzerland, Spain, Poland, Germany. Everywhere we see the adoption of the stablecoins happening rapidly. And this is something that we should distinguish at the very beginning, cryptocurrencies from the stablecoins, right? I believe that stablecoins are a bridge between the digital finance in essence and the system, a legacy system that we all know and we worked for decades within. And why the infrastructure, why that really matters? Because as you said, the key factor, there are three key factors, in my opinion, for the mass adoption of the digital assets, digital currencies. And the top one, it's credibility and trust. As you mentioned, we all know stories about the crypto. Yeah, we all know pumps and dumps, we all know scams and stuff like that. But if we look at the stable coins, we don't have those stories. So the stable coins, in essence, let's say they are compliant by design. This is something which resonated in my mind. This is compliant by design. There is no compliance built artificially. Within the code, you can really adopt rules, regulations that make those stable coins safe and credible by the audience, by the users. But the users today trust the financial organizations, as we know. And that's why I'm talking about the bridge. Together we are here today and we're talking about this bridge. We're talking about the bridge between banks, between the financial institutions, between the governments, and between the technology. Because imagine, for me the most appealing use case of the stable coins are cross-border remittance, cross-border transactions. Because we live in a bubble tower. Like for the hundreds of years, all the governments are printing money or making coins, getting less and less gold into those coins. And they build a machine that actually makes money for those countries, but the citizens of those countries are living in the silos. And we are privileged here to be in a very digital atmosphere and an ecosystem of UAE. But still, sending money back and forward in a significant amounts, it's pain in hand, let's say, right? So both consumers and organizations suffer delays, seizures, freezes, all of those things that are very inconvenient for the business and for the consumers. So coming back to those, let's say, conditions of adoption. So the first is credibility. So the blockchain and the stable coins are compliant by design, and they can be easily adopt what we see in most of the regions, most of the governments. They are all issuing their own stable coins, or they are relying on the stable coins that already exist and has already an adoption. And at pace, for the last 2 years, after my successful exit from my previous business, I moved here to UAE to build a financial infrastructure for tomorrow based on the stablecoin rails. And we've been working like an eager beavers to get to the point where these 2 years of our collaboration with the different institutions, financial institution existing, building a new technology. We are a direct partner of Circle, one of the few in the region. Circle is an issuer of USDC. So the most reliable and the only audited stablecoin in the world today, because we have a USDC, we have a USDT, two major ones. So imagine USDT you cannot now officially use in Europe, you cannot officially even use in USA because it hasn't been audited. There is no guarantee that there is enough dollars that the USDT has been issued. With a Circle, the situation is completely different. This is a very stable and a reliable organization. I've been a couple of weeks ago in New York City for the invitation of the board. These people come from the corporate world, from the banking world. They know exactly the rules, the regulations they are aiming to simplify. Yeah, so basing on the credibility of existing organizations, and through those organizations adopting the stable coins in the at least trade global remittance transactions, this is something that will happen over the next months or even happening right now. But with that, we cannot forget something that my colleague already mentioned, the global operability and liquidity. Because, you know, the stable coins as they are soon I bet that you will be able to go to the shop and pay for your coffee with a stablecoins, with a USDT or USDC, and this already happened. Airlines are talking about that very loudly. Emirates, Etihad Airlines, and other global airlines are adopting that. Taxis. You have a hell list of usabilities that are actually today at your hand to use the stablecoins, and we are here. We not talk about Africa, where people don't trust banks, they don't trust local currencies. For them, it's a natural way of getting rid of a situation that they get actually been forced to be with for the last 100 of years through the colonization and things like that. So they want to get rid from this, let's say, domination of artificial currencies printed for them. They want to go to gold, they want to go to the stable coins. I believe those regions will be the first one to adopt a fully stable coins. But today, we need the liquidity in all of those locations where we want to move back and forward the stable coins. So we need those exchanges that you mentioned. So at Pace, we already integrated over 30 different exchanges all over the world, bringing 150 corridors, fiat corridors, through the stable coins. So we have a Flutterwave in Africa. We have M2 exchange here in UAE. We have an European. We are a minting partner of Circle. We are a partner of Circle Payment Network. This is a network of only very certified virtual asset providers all over the world that help us facilitate those liquidity challenges in the different locations. And this use case beautifully fits with Dubai, which became like a trade center, epicenter of the world. Goods and money are moving back and forward. Dubai, and over 80% of our expats, and that was already said. We all supporting our families. We all sending money home. We investing in the different locations. Or the second, the reverse, Dubai becoming a new Switzerland. And you can see that very brightly. Like money are moving to Dubai because people and money feel safe here. This is very important. So I just been on a meeting with one of the oldest corporates in the world, 400 years, that moving now their treasury here to Dubai because they feel safe. But imagine having a treasury on the self-custodial wallet, that you have a liquidity in 150 countries at the same time. This is the future for the investments and also a global trade and all of the things that require moving the money out of your comfort zone, out of your country or out of your region. But the third, and I think the major factor for the adoption by the users is the usability. Blockchain and the stable coins cannot be more like for crypto degens. It cannot be only for the crypto native people because we require simple solutions. We require something that with 3 clicks will be able to send money everywhere in the world without going through the buying gas procedures, all of those complicated, remembering our 15-digit seed phrase, because if we forget, we lose our assets. All of that today can be simplified with a technology. There is a list of simplification that came over the last 2 years into blockchain. Most of them are under account abstraction. So you can actually abstract all of those things that was difficult and put them, like for example, in our system, you can send money cross-border email to email without putting a 15-digit address, wallet address. So when you're sending money email to email, it's really for dummies, right? You cannot make a mistake. You cannot burn your assets. It needs to go to the adoption. It needs to be as easy as your favorite banking app. And you need to feel familiar with your bank in this ecosystem, with an app that looks like a banking app, and the guarantee of the institutions that's actually making money. Thank you.
Amazing, Filip. You mentioned last the usability, which I think it's a key thing, as you mentioned. And this takes us a segue directly to Rohit. Rohit is the co-founder and the CFO of Mintoak. So about usability, about the acceptance. We have merchants, we have banks, we have SMEs and ordinary people. All of them are looking at how I can benefit, what this is for me, and how I can take it from a concept to mass adoption. So what you have to add on this?
Sure. Good afternoon, everyone. Thank you. It's a fascinating question. Also fascinating the way we sort of like are sitting, because I think I just kind of am in a position from my vantage point to bring it all together. And let me contextualize it, right? We are currently working with 4 million merchants globally. We are powering more than $75 billion of payment on an annual level with them. And I think it's usability which is very, very critical, because what the SMEs are looking for is, again, going through, number one is speed. How do I bring out my finality delays? And I think blockchain is a perfect example of doing that. What they're looking for is convenience of really not having to deal with all these rails individually. And what I mean is, so today, for example, earlier in the day, we spoke about payments happening on card rails. We spoke about payments which are happening not on credit, but still on, let's say, RTPs, payments which are happening on QR, payments which are happening on link. As a merchant, you want to experience all of them in a unified manner. And that's something that we are powering already for our merchants. So the first part of the question that you were asking is are we ready? The short answer to that is yes. I mean, enabling a stable coin on our platform is just an API integration, right? And that's something which I'll come to from a regulatory standpoint. And the second thing, or the second perspective and stakeholder in this is the player that Filip was talking about, is really the app and the experience should feel like it's coming from a bank or from a player that I can trust. And again, going back to the conversation we were having, we are right now working in 15 plus countries. We're working with 30 banks. And in some of those banks, we have helped them, in fact, beat competition from big techs and make them become larger than them in the market, right? Now, again, when I think about banks as accepting, what is it that they're looking for? And what they're looking for is someone should be able to give me a plug and play to the extent it exists in the B2B world, and say that you have a platform that's already ready, that's already certified, it can seamlessly plug into my system, and you keep it fresh, right? Which is what we are doing for all the banks. But the third vector, which you didn't speak about, and I think that's the elephant in the room, is really how do we work with the regulators to help them understand that, stablecoin or crypto is not really something that's happening outside the box. And that's where, for example, in India, we're working with some of the banks and the regulator there in enabling CBDC, which we see as a stepping stone. Because again, I'll go back to the trilemma, right? And one of the focal point of trilemma is decentralized, which regulators don't necessarily are wired to think. But if we solve for, going back to the FX example that Nauman you spoke about, if we solve for low risk and we solve for speed and we give the regulator a taste of what stablecoin could eventually look like, I think directionally adoption is going to happen. I don't think that's a question of whether or not. What we are all trying to do is accelerate that adoption, and that's going to be a function of have user experience or SME experience that's top-notch, have a product that's already sort of live, tested, that the banks can feel with, and go gradual, if you will, with the regulator, because they need to cater to trust, they need to cater to a lot of different sensitivities, which as startups we don't necessarily appreciate, and that's the direction I see us traveling.
Okay. Interesting, Nauman.
Yeah, it's a great conversation. So I was itching to get in, specifically what Filip was mentioning. I think cross-border is important here, and yep. there are a lot of points that are already raised. I just want to highlight that because we are active in Africa as well. So why exactly it is such a big deal, especially from a remittance perspective? So just wanted to bring to everyone notice in the statistics. So last I read, the amount of money that is flowing from the GCC to the low income to mid-income countries, you all are expatriates, right? So we do transfer money, was in excess of $690 billion. Wow. $690 billion. Let that sink in. So when you are trying to remit money, it is expensive. It's not an easy business, right? With a fiat mode. So I think that's where countries. It is important that we deal with stable coins in countries where there is hedging inflation, right? And you can easily settle instead of waiting for T+2 or whatsoever. You can just do it instantly. The volatility is absorbed. The liquidity is there. So all these factors are actually prompting a lot of countries to go ahead and regulate it. Now, yes, if you look at Africa, my fellow panelists did speak about Africa. You look at Nigeria. You look at how much Ripple is actually doing in Africa, right? So it's a big thing, especially in those regions where the money is flowing in. There's a lot of volatility. There's a lot of inflation. So it adds a bit of flavor of certainty, and that's where I think the adoption must kick in. Regulation again. Before I came, when you were introducing, you said it's a controversial topic. Look, again, it's a controversy if you do not regulate it. Yep. It has to be backed up. You exactly need to know against what the coins are being used. So that's where the regulations come into the picture, and that's where we must keep our eyes open. We must help. We must partner. We must grow together with the regulators. And yeah, I think like I said, that it's more of a fusion. It's providing customer more options to transact.
Yeah. Well, amazing. I am sure that everyone in the room have tons of questions to Nauman, Filip, and Rohit. But for the sake of time, and I know that lunch is waiting, so we will cut this. But please, I urge you to reach out to the three gentlemen here. They have tons of experience. Me myself, I have questions for you, but I will not push it in front of the stage. So please join me to thank Nauman, Filip, and Rohit for their valuable insight. And please don't be shy. Reach out to them and ask as many questions.